Hello everyone, I hope you all are fine. In today's video, we will be discussing about the gold versus silver. So please watch the video till end, and if you have not subscribed to our channel, please make sure to subscribe our channel and press the bell icon and be with us to continue. And thanks for watching. So the first thing we want to discuss is gold versus silver investment. Which one is better, right? So the first thing is the biggest thing that differentiate precious metal investing from other commodity investing is utility. For most other commodities, investors judge value based on supply and customer demand. If you want to invest in coffee beans, for example, you can judge prices by how much coffee people are currently drinking, how uh, tastes are changing, etc. Precious metals are different in that they have relatively low commercial utility. Compared with other metals, here are relatively few customer or industrial uses of assets like gold and silver. However, silver does have much more industrial and commercial use than gold. Approximately half of all of silver bought and sold on the market is used commercially, with applications ranging from dentistry or electronics. This is still quite small compared to other metals which are almost entirely used for production. By contrast, gold has very few commercial applications aside from jewelry. This gives investor an basis on which to judge and predict price movements for silver, since you can make decisions based on factors such as industry need and how the global economy is moving. Right now, we are discussing about the uh, silver versus gold cost and volatility. Right. So at the time of writing, silver traded at approximately uh, $25.77 per ounce. Gold traded at 1960 uh, per ounce. While the details vary, the gap is consistent. Gold is historically much more expensive than silver. This is in part because silver deposits are nearly 20 times as common as gold. This leads to two outcomes for investors. First, it's much easier to invest in silver than gold. You can buy more of it for less money, meaning that less liquid investor can get into silver more easily, right? As with all financial assets, this can also expose you to greater potential gain and losses, since you are likely to see more change relative to the scope of your investment with a portfolio of silver, right? However, that's also the textbook definition of volatility. Low cost assets tend to also be highly volatile, specifically because small price changes have outsized effects on underlying investment. For example, at current prices, silver only needs change price by $2.57 per ounce to have a 10% price fluctuation. If the price of gold changed by $2.75, it would represent a chance of 0.0013%, right? So volatility is not necessarily a bad thing, but it is something to watch out for, especially if you are seeking a long-term investment, right? So now we are discussing gold versus silver relationship to broader market. The price of gold tends to move inversely to the stock market. Gold, what's known as a counter cyclical investment, this means that it tends to go up when mainstream assets go down and vice versa. In simple words, it means that if the mainstream assets go down, so it tends up. But when it tends down, the mainstream assets goes up, right? Historically, the worse the stock market doesn't, the more investors flock to gold. By contrast, when times are good, investors tend to pull their out of gold and put it into assets with greater lengths or the overall economy. As a result, many investors hold gold in their portfolio, especially for if they need liquidity during a downturn. For example, a recession is worst time to sell stocks, but the best time to buy them. Having a pre-existing investment in gold can give you a valuable assets to sell during a recession, so that you can buy other people's undervalued assets without selling your own. So that's the greatest reason of that, how you can do that, right? By contrast, silver tends to move with the economy overall, at least more so the more so than gold. This is an significant part because of the same commercial applications that make silver a more predictable asset. When the economy slows down, industries need less silver for manufacturing, driving the price down. Now we are discussing gold versus silver. Which should you buy? There is no such thing as an objectively better investment. It all depends on your market position and the state of your portfolio. A good rule of thumb is this: buy silver if you are investing for when times are good. This is a semi predictable speculation asset that can make you some real money. Buy gold if you are investing for when times are bad. And a good 500 index fund will do you better than gold in long run. But this can be good counter-cyclical asset if you want to ensure liquidity into event of a recession, right? So the next we are going to discuss is the bottom line, right? So now we are discussing it in proper detail, so you should listen it for for the right position and tell long. Gold and silver are especially popular commodity investment in large part because of their historic relationship with money. Governments once used gold and silver to make their currency, while no major economy uses gold or silver as the basis of its currency any longer. Investors still see these two metals as active stores of value. Silver is more volatile, cheaper, and more tightly linked with the industrial economy. Gold is more expensive and better for dis- diversifying your portfolio overall, right? So uh, or either or both may have a place in your portfolio, right? Precious metal investing tips. Arguably, the most use of a gold for gold as an investment is to migrate portfolio risk. This is good asset for market downturns since it can give you a source of value at time when other investors are cratering, right? So these were the some things that we discussed about the like gold versus silver analysis and which one is better. So we discussed it and which investment will be beneficial for you. So I think it's enough for today, and we will discuss in the next class, and I hope you will like it. Probably you should like it and give a thumbs up to it, and if you have not subscribed this channel, please make sure to subscribe and press the bell icon, that you will never ever miss any update according to our new latest video. So if you want to get updated, then also click like bell button and press on all, so you will be getting our all notifications. Thanks for watching. Thank you so much, and see you in the next video. Thank you. Bye.